Oracle just reported earnings and the stock jumped 40%, catapulting founder Larry Ellison to the top of the rich list. But is there still time to buy the stock? At the latest share price, Oracle now has a market value of $896 billion. The company has $11 billion of cash and investments on its balance sheet and $82 billion of long-term debt, which means the total enterprise value is $967 billion. Meanwhile, revenue over the last 12 months comes to $59 billion, with $12.4 billion of net income and $24 billion of ebitda. Free cash flow, however, is negative thanks to significant capital investments. Oracle provides software and services for large enterprise, but its fastest growth comes from AI data centers. Oracle doesn't own the buildings or the land in its data centers, but it does purchase and maintain the equipment, including GPUs. Companies like OpenAI, Meta, and X then pay Oracle for access. And while Oracle's Q1 numbers were solid, the spotlight was on the company's future revenue prospects. Remaining performance obligations, which represent contracted revenue that the company expects to receive in the future, increased a staggering 359% to $455 billion. Unusually, the company even laid out a revenue trajectory for the next 4 years, with the expectation of $144 billion of infrastructure spend by 2030. And much of this growth is being linked to OpenAI, the company behind ChatGPT. But despite the incredible numbers, not everyone is convinced. RPOs can usually be cancelled or amended lower, and there's speculation that OpenAI, which currently loses billions of dollars a year, is punching above its weight with this contract. At the same time, building data centers is increasingly competitive and capital intensive. Oracle expects to spend another $35 billion this year alone, which will further depress the company's free cash flow margins in the short term. Even so, let's assume that Oracle does meet its revenue expectations and manages to hit $210 billion of revenue by 2030 across all of its segments. That equates to a 5-year growth rate of 30%. Assume a 25% net income margin on that figure, and the company might do $53 billion of net income in 5 years' time. A PE multiple of 25 would then put the market cap at $1.3 trillion, which works out to an investment return of only 8% a year. And those numbers do seem aggressive when looking at Oracle's previous history. So the question for investors isn't whether or not AI will drive tremendous growth. The question is whether the market is being too optimistic or not optimistic enough in its projections. Right now, there's a lot of optimism floating around, and that makes this a difficult bet to take. But these are my personal opinions, not financial advice, and I hold no position in Oracle. For more investing videos, make sure to join my newsletter at 3minutebreakdowns.com. Thank you for watching.